Hey everyone, welcome back to Corporate Decoder, the place where we dissect the often strange world of corporate filings. Today we are diving into Pacific Sports Exchange's latest quarterly report. And trust me, it's a bit of a roller coaster, so buckle up. You might think sports equipment is all fun and games, but this report hints at a company trying to avoid striking out. In this Form 10Q report, Pacific Sports Exchange gives us a peek into their performance for the period ending February 28, 2025. If you have never heard of them, Pacific Sports Exchange specializes in reselling new and used tennis and golf equipment online. Think of it as the second-hand sporting goods shop, but digital. A lot has happened, so let's dive in and see what's going on. First, let's examine the company's balance sheet. This gives us a snapshot of what the company owns, which are its assets, and what it owes, which are its liabilities, at a specific point in time. Looking at their most recent balance sheet as of February 28, 2025, we see some pretty small numbers. Their cash on hand is a mere $1,972. To give that some context, that's less than a used car in some parts of the country. When you compare that to the $995 they had back in August of the previous year, it shows a slight improvement, but it's barely enough to keep the lights on. Their inventory, which is all the sports equipment they plan to sell, remains unchanged at $269. That's not a lot. In total, their current assets amount to $2,241. It is up from the previous period, but it's clear they are operating on a shoestring budget, barely scraping by. Looking at the other side of the balance sheet, their liabilities, meaning what they owe, are more substantial. Accounts payable and accrued liabilities are $5,074, and Aussie four-term debts like bills they need to pay soon. However, these are drastically reduced from the $63,019 they owed back in August. It appears like they were able to somewhat clear a few of the debts. They also owe $17,489 to related parties. This is money they have borrowed from people closely connected to the company, such as investors or executives. The total current liabilities come out to $22,563. Digging into the shareholders' equity, it is quite the story. There is no preferred stock issued and outstanding. This means the company hasn't sold this type of stock. For common stock, the numbers show 14,375,000 shares issued and outstanding. The additional paid-in capital shows $414. That's the money investors paid above the face value of the stock when they bought shares. But here is the kicker. The accumulated deficit is a whopping $171,000. This represents losses the company has accumulated over time. Their losses overwhelm what the investors have contributed, leaving them with a stockholders' deficit of $20,322. Now let's look at the company's income statement, also known as the Statement of Operations. This tells us how much money the company made, how much they spent, and whether they ultimately made a profit or suffered a loss over a specific period. For the 3 months ended February 28, 2025, their revenues, which is money they brought in from sales, were $2,500 for the same period the previous year. So while it is growth, it still isn't a large number. The cost of goods sold was $900. That's the direct cost of the products they sold. That leaves them with a gross profit of $1,100. However, their operating expenses, which are the cost to run the business, totaled $8,273. The result is a loss from operations of $7,073. Their net loss is the same at $7,173. The report also indicates that their basic and diluted loss per common share is negligibly negative. This means that for every share of stock, the company lost a tiny amount of money. This is based on 14,375,000 shares outstanding. Now let's zoom out and examine their performance over 6 months. Their revenue for the 6 months ended February 28, 2025 was $2,000. The $3,400 they made during the same period last year. Their cost of goods sold was $900, resulting in a gross profit of $1,100. Their operating expenses were quite high at $16,090. This led to an operating loss of $14,990 and a net loss of $14,990. It is the same story as before, not good. The statement of changes in stockholders' deficit details how the ownership value of the company changes over time. Looking at the 6 months ended February 28, 2025, we see that the accumulated deficit started at $156,221. Then there's an interesting event. forgiveness of a related party loan for $73,823. This essentially means someone who had lent the company money decided to write off the debt, which boosts the company's books. However, they then had a net loss of $14,999 over the period, which increased the accumulated deficit to $171,211. That forgiveness was key to keeping the deficit from ballooning out of control even more. Cash flow statements can show you how the company is managing their money. For the 6 months ended February 28, 2025, Pacific Sports Exchange had a net loss of almost $15,000. Changes in things like accounts payable and related parties advances funding operations end up giving them about $1,000 in cash from operating activities. Not a lot, but at least it's positive. The net change in cash for the period was an increase of $977. It started with less than $1,000 and ended with almost $2,000. There are some notable disclosures in the notes to the financial statements. First, Pacific Sports Exchange operates as a sports equipment vendor specializing in tennis and golf. They find high value equipment and sell it online. However, things get more interesting when we read about a change in control. Effective September 23, 2024, there was a stock purchase agreement where a big chunk of the company's stock was sold to Alpine Elite Holdings Limited. Now, Alpine Elite Holdings can call the shots. Also, the old officers and directors stepped down and Huang Huasheng stepped in as the new CEO, CFO, secretary, and sole director. Here is where things get real. The report says there's substantial doubt about the company's ability to continue as a going concern. This is accounting speak for we might not be around for long. They need to get additional financing to keep the lights on. If they can't, well, it doesn't look good. The summary of significant accounting policies outlines how the company prepares its reports. Nothing too unusual here. There are some details on related party transactions. The company relies on getting money from related parties to keep things running. There is no promise that this support will continue. Also, the former CEO forgave a debt of $73,823. It is worth noting the concentration they have with customers and suppliers. During the reporting period, 100% of their revenue came from one customer. On the purchase side, 100% of their purchases came from one supplier. This extreme reliance on a single customer and supplier is risky. The disclosure controls and procedures are ineffective. There's a material weakness in their financial reporting process due to a lack of expertise, oversight, and segregation of duties. This means there is a high risk of errors in their financial statements. There isn't much other notable information in the report, so what does this all mean? Well, Pacific Sports Exchange is in a tough spot. They are barely generating revenue. Their expenses are high and they are accumulating losses. They rely on a single customer and supplier, and their financial reporting has some significant weaknesses. On the bright side, the new management team and the forgiveness of debt have provided a bit of breathing room. However, they need to find new funding. They operate in a niche market with potential, and the new management might bring a fresh perspective. They need to diversify their customer and supplier base and improve their financial reporting. Overall, Pacific Sports Exchange is at a crossroads. It could turn things around with new funding and better management, but the risks are very real. Will Pacific Sports Exchange be a grand slam or strike out? Only time will tell. Thanks for watching. If you found this breakdown insightful, please hit the like button, leave a comment, and subscribe for more corporate deep dives.